None of us always make perfect decisions. Even those of us that become very financially literate and financially successful make a ton of mistakes along the way, and that's okay. But the key is to learn from those mistakes. And in this video, we're going to be discussing my biggest financial mistake, as well as a bonus almost financial mistake that would have been even bigger than the actual one. Hey, if you don't know, my name is Evan. This is My Money Marathon. I create content centered around personal finance and beginner investing, trying to help beginners start on the path for the building wealth. And as I mentioned in this video, we're going to be discussing my biggest financial mistake and my biggest financial regret. And yes, by the way, this is a no strip, not a strip of tape. Early on in my investing and personal finance journey, I fell into the trap of day trading. Now, when you just Google how to make money on stocks, you're going to fall into the day trading rabbit hole. That's usually people touting the excitement of how to buy a stock at the right time, how to sell it at the right time, and make huge profit from that trade. I started off with AMC, the movie theater company, and if you know much about investing, then you probably know where this story is going, but this graph is a good summary of how it went. That stock had previously jumped so high that I actually personally knew somebody who had gone up by about $20,000 on their $800 or so investment just from how much AMC had shot up. This meant that many other people, now myself included, were falling for FOMO, which means fear of missing out. You see a stock run up and you think it might be able to do it again, and you're so afraid of missing out on that run that you just jump on at the wrong time. I had a genuine fear of missing out on tens and thousands of dollars in profit off of a reasonably small investment. So I kept putting more and more money in, all the while the stock just keeps going down. All things told, I probably lost about $1,000 on just this AMC endeavor alone. Now, the worst thing is I didn't even get anything back for my money. Yeah, I got a learning experience from the situation, but other than that, nothing. At least if you buy a bad laptop, you get a laptop when you're done with it. What I learned from this experience is that short-term stock trading just isn't for me. I personally don't believe in it. I don't believe in the consistent predictability of the stock market just using trends and charts and graphs and statistics. I don't believe that that is consistently viable over the long term. And that for me, I would much rather have a passive investing approach. And that's a mindset I've taken with me until this day and off in the foreseeable future. When you really think about it, most of the stock market is run by algorithms. It's run by computers who are deciding what they want to do with stocks to maximize their profits, because they have the huge, massive amounts of capital behind them in hedge funds to manipulate the market. You and I, who have $10,000, aren't going to be able to do that sort of thing. So I would rather just sit there and ride whatever the algorithms want to do in the long term, because it's going to want to make the market go up, as opposed to try and predict short-term fluctuations that aren't up to me. I've spoken a few times about my experience in college, and I've mentioned that thankfully I didn't have to take on any debt to attend college. However, I still took on a job at the student union just to get some spare cash while I was there. I gained some valuable skills, some valuable people skills, and also, of course, earned some spare cash on the side. But my biggest regret is just seeing this spare cash as spare money to spend. When I would get my paychecks, since I knew that I didn't need them to get by, I would just see it as spare money that I could spend on events, or spend on clothes, or spend on new gadgets, as opposed to saving it really in any way. Instead, I wish I had started the habit of investing and saving a portion of my income at that point in my life. And I don't mean investing or putting aside every single penny that I earned from that job, because that's not realistic for a college student. You want to have that spare money and independence and feel like you put your work into something and you can get a short-term reward from it. But I wish I had built up that long-term reward cycle for myself. Even investing around a quarter of my income would have made a massive difference over the long term, and an even larger difference just in terms of building that mindset and that habit. Even though I didn't make a ton at the student union, this would have easily been thousands or close to probably 10,000 in contributions set aside, and then thousands or at least hundreds more in terms of gains by now. Now, as I talked about up at the top, I do have an honorable mention of my almost biggest financial mistake, and this would have blown both of those mistakes or regrets out of the water. No, it didn't entirely go through, but I was about 95% of the way to doing it. I actually made a full video detailing this situation. If you want to learn more about it, up there in the card and also linked below in the description. But in short, I almost went through with purchasing a Tesla too early off in life. I have been a huge Tesla fanboy for a long time, and I still really am, and I still every day think about that goal of getting a Tesla. But this situation was early on after graduating college and getting my first career job. I was excited about the income I was making and figured I could afford a Tesla now. Long story short, if I had gone through with this, with the financial state that I was in at the time, lacking the investing knowledge that I had, the budgeting knowledge that I had, it would have easily cost me tens of thousands of dollars more than it would if I buy it in the near future now that I'm more set up in terms of having money always set aside towards investments and generating gains that way. Prices were rising due to COVID, interest rates being so high. There are many factors that would have made it the worst time for me to go through with that purchase. And what I learned from this is to not take short-term financial success as an indicator that something needs to change in my life. I need to upgrade my life in some way. That's how lifestyle inflation happens. Now I'm much more focused on making sustainable changes in my life once I know that a financial success is going to be sustainable for the long term, increasing my saving and investing alongside it, and then maybe having a little bit of lifestyle inflation. I really hope you enjoyed this video. If you did get some value from it, some insight from my personal experiences, leaving a like below would be a huge help to this channel and to this video. If you're interested in more content similar to this, I'm very active on Twitter, Instagram, TikTok, all that stuff linked down below. But other than that, see you next time.